Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, March the 24th. The year's 2020. Let's talk trading. Walmal method, day 19. Okay, fellow traders, you know the drill. These videos are for educational purposes only, and your results may differ from mine. And trading is very, very risky. Therefore, if you are looking for trading advice, financial advice, investing advice, seek it from an accredited financial professional because trading is risky and you can lose all of your money. So, when you take the advice from an accredited financial professional and you lose all your money, you know you got your advice from an accredited financial professional instead of some guy with a funny name posting trading videos on YouTube or something you read on a trading forum or a tweet or a Facebook or something somewhere. And also, fellow traders, the most important thing when you're trading, make sure you don't lose any more on any one particular trade than you are willing to lose on any one particular trade. That's your risk management side. On the money management side, take the profit while you can. I'm going to blast through these charts here for you, just so you can have a quick look-see. You can see here that the pound dollar has filled the weekly gap, and most of the pairs have filled the gap. We got a couple right here that haven't. So any weekly gap traders out there, you can see that that's still possible. And here's that weekly pivot right there, something to consider in the future. We've got a green day here. You see we broke through the previous day's high, but now we're back in that upper wick zone. And we also broke through the 1700 to the south. Okay, yesterday there's the opening range. You see we broke through it. Yesterday was an inside bar, so we broke through that same area. And you can see here, there's lots of inside bar action. So traders, you inside bar traders, you should be having a great day today. The range, once again, there's only 5 pairs under 100. I hope you guys are loving this because we haven't seen ranges like this in a long time. So take advantage while you can. Okay, the buy zone traders, we opened. We went straight for the pivot. We went to the weekly open and crossed it a couple of times and then shot through it. And here we're coming back down towards it. Red rats, I hope you feasted and feasted well. 288 pip range. Weekly pivot, 118.26. We still haven't hit it. You can see right now we're crossing the double O right there. Daily pivot, we took it out. And you saw, we already know we haven't hit that weekly pivot yet. We're back in the wick zone, so you can look for a breakout, either 75 to the south or 1213 to the north. But remember, fellow traders, these videos are for educational purposes only. Okay, getting back to the Walmal trade. So this hour, let's see. Oh, I don't have the price meter on this chart, so what we can do is just flip over to the hour. You can see where price opened and what happened next. On this one, once again, you can see price opened. It tried to break the 50, turned around, and there was a short to be had. This opportunity here and here, actually, I was trading this hour earlier. Didn't get a chance because the bid was below 40, so I was just holding. And as you can see, just one of those trades would have paid off really nicely. But that's something that you really have to overcome. And Walmal and I, when he was here on the phone yesterday. We discussed it. You have to forget about what happens after the trade because the trade is over. And to sit there and kick yourself for not getting more pips, you are missing the point if you're trading this method. Depending on how heavily you trade, this method in a couple of hours can produce a lot of money. So, for example, if you're trading a full lot, $10 a pip, and you go out there and you make 2 to 5 pips, that's $20 to $50 right there. Now, of course, that's not a lot of money. Is that enough to live on? I don't think so. But the point being is that if you do that and do that consistently, those 20 to $50 add up. So, I mean, if you say you do that 5 times a day, that's anywhere from 100 to 250 a day. Is that enough to live on? Once again, depends on your situation. But I don't think anybody would sniff at putting away $100 a day, especially if you're doing this a few hours a day as a sideline hobby, part-time, partial income, however you want to characterize it. So there's just no reason to beat yourself up because you didn't make 50 pips when you took this trade. Because if you took it here, for some reason, if you jumped in here, or maybe you jumped in at the 30 line or the 20 line, the whole idea is to get your pips and get out. Because failure to do that, it can snap back on you, especially in this market. You can be up 5 pips and in a blink of an eye, you can be down 10 or 20. I mean, when you look at some of these 1-minute candles, you can see what I'm talking about. So it's just really, really, really important. And the thing about it is that it's such a simple method, but it's amazing what our minds will do to make it complicated, to make it difficult. Once again, in this particular method, this is, we're trained monkeys. Now, somebody said, well, how come you haven't automated this simple system? Well, who says I haven't? Okay, that's number one. But number two, I don't talk about automated trades because that's not the point of what I'm doing here. I'm not here to push a robot. And I will not, I repeat, I will not share any robots that I write. And it's not because I'm stingy or greedy. No, it's because there's too many things that can go wrong in a blink of an eye, and I don't want to be liable. I mean, I'm human, I'm subject to making a mistake, and if there's some little tiny bug in the code that only appears under certain conditions, and when it appears, it makes you lose like half your account or something, or all of it, and then some. No, I don't want to be held responsible or liable for that. And I don't want to see that happen to anybody because when you're doing automated trading, there's so many things that can go wrong outside of the robot itself. I mean, a loss of power. I mean, you can lose power. You can lose your internet connection. The servers could go down. Your computer could freeze and lock up. I mean, my background's computer science. I know what happens when there's a malfunction. So I just don't suggest it. Other people, like, well, you could put it on a VPN and blah, blah, blah. Yeah, well, you could. And if that's what you want to do, go for it. I'm not telling anybody not to do it. I'm just saying I'm not going to participate in that venture with you. So, enough about robots. But as far as other traders, the thing about this is there's nothing to do other than pull the trigger at the right time and then Like if you pulled the trigger on this candle right here, you had an opportunity to make almost 10 pips. Let's see, the low was, you could have made an easy 5 pips. But if you didn't do it, then you see it came back against you and it gave you another opportunity. And then if you didn't do it, it came back against you and it gave you another opportunity. So, I mean, now some people could have said, well, you could have gone ahead, taken the trade at this line, set your stop loss maybe 1 pip above this line, so it'd be 11 pip stop. So you make sure your position sizes accordingly. Okay, even though it says stop loss maximum 10 pips, I'm just saying you could have put it right here at the line. Then, as price did its thing, you're just sitting here, well, it's not breaking it. And then, yes, maybe you would have participated either down to the 1700 or down to the 1690. You could have easily done that, simply done that. So you could have made it your own system by doing that. You know, one of the things that I note, and I've talked about it before, see this big red candle, like this big red candle here, price has to return to the open. Well, I would wager price is going to come right back to 1735. But remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. But that's just how I analyze the price action. I see a big candle like this, I just think that price is going to return because it usually does. But the main thing I think this method really shows is what each trader is made of and how well they can stick to a plan and how well they can just focus on the one plan. I know I am having some difficulties with it because if I flip over to a different chart, I'll start thinking in terms of rat zones, wick zones, buy zones, pivots, VWAPs, I mean ATRs, fib retrace. It's easy for me to start thinking about things when I'm trading this method. But if I can put the blinders on and, hit the reset button and not think about it, all I do is when it opens is I'm going short here, I'm going long here. That's it. That's all I have to do. Nothing more. And then once that I get in the trade, I'm either going to take a loss or I'm going to take a win. That's it. That's the essence of it. It's the simplicity. It's just so beautiful in that's all. That's your beat. That's all you're going to be doing. Nothing more. There's nothing to analyze because once you put the trade on, as Walmal said, does your heart start to beat a little bit faster? Do you feel it thumping in your chest? Is your hand shaking? I mean, because if any of those things are happening, you're doing it to yourself. Why are you reacting that way? Because this is all this method is. When it gets here, you react. When it gets here, you react, and that's pretty much it. It's just all reaction. There's no thought in it. And if you take 2 pips and you could have had 5, get rid of the could have haves. Just eliminate that from your mental chatter. Get it out of your head what you could have had. No, what you did was you entered the trade, you followed the plan, you got your profit, and you got out with your profit, and that's that. Now, the only thing you need to do is decide, am I going to trade again for the day or am I shutting my platform down? That's it. No more. Clear your mind of all the rest because if you don't, it's going to bite you. Okay? Speaking from experience here. Because yes, I put on a trade and I didn't take my 5 and it hit my stop loss. It turned on me. Whose fault was that? Mine. Why didn't I take it? Oh, because I was looking at something else. No. The Walmal method says you take it when you can. Okay? So, fellow traders, Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.